Good morning, folks. Appreciate your patience. All right, so we're going to go over a few things. I'm not going to spend a whole lot of time with you today. I'm going to try to keep the session short. The the focus is really to try to get you up to speed as fast as I possibly can, but not cramming you with too much information because I know there's a lot of new followers, not a lot of new readers to my material, and you're all anxious to get to the next video on my tutorials. And in between that, I'm going to give you what I think you should be doing with your time. It's not going to be learned by watching my videos. Okay, there's a lot of folks that will say, watch the videos. And it's true, you have to see the videos to get the concepts, but don't spend your time just watching videos, binge watching. You actually have to do all the work in your own charts. The folks that are going to do well with my stuff or anything else, it's going to be the ones that participate and practice and do it without being told to do so by me. Um, you got to have some initiative, okay? And without having that, it's going to be, well, next to impossible for you to get good. And you're going to be the one that stands in the way of you being proficient with this. Not my delivery of the content, not my frequency of putting out videos. It's going to be the amount of time you put into studying and studying correctly, practicing it correctly. So I'm going to give you why I believe that you should be focusing on one pair, okay, and how you should go about doing that, and how you should log each experience each day. Now, either you're going to do it live or you can do it by hindsight. A lot of you have jobs, a lot of you have businesses. You just life's going to be in the way, and you can't always be watching live price action. You still can learn this. I taught myself a lot of the things that I teach, all based on end of day data. I would go back and look at charts that happened during the day with an hourly chart, and I could see certain things. And that's how I learned a lot of the things that I started with my core principles when I was starting with the Forex tutorials back in 2010. I've been trading a lot longer than that, but a lot of the core understanding came by way of just simply understanding end of day trading. And that means nothing intraday, nothing live. It was all based on basically a daily chart. Okay, so yesterday I gave you guys a chart here and I highlighted the price hitting this specific level here. And I'm going to hopefully I'll stem a lot of this with this comment, but it probably won't be as effective as I was hope it would be rather. But everyone seems to think that the magic is happening with the Fibonacci, and there's a lot of things that go along with using the Fibonacci for my targets and my entries. It's not the sole basis for my entry. Okay, at first glance it looks like something you've seen before. Okay, but there's a lot of other things that you have to focus on. And as soon as you try doing it on your own, you know right away it's not as easy as you think it is. You don't know what to anchor, what fib on, what level, what high, what low. Suddenly, it doesn't look like it doesn't work that good, and it's because of the experience factor. My group that I have mentored for the last over well, it's been a year now. Uh, some of them are still admittedly struggling with some of the concepts, and I'm constantly repeating it's an experience thing that they have to grow into. You don't learn this overnight. You certainly aren't going to learn it in 1 year, okay? But you will learn to grow in your understanding. So I'm going to give you a foundation today to start with. Now, this is only specifically dealing with scalping, okay? So please don't come at me on Twitter about, hey, look, what about central bank dealers range, and what about the flout, and what about the moving average crossovers, and what about ICT Trinity? stick to what I'm giving you. Not because I'm trying to hold anything away from you, but I gave you guys way too much stuff before, way too fast. And it just gave the impression that you needed to have all that to be successful. And to some degree, a lot of my um, detractors were right in the sense that I was giving way too much. But what I was really doing was I was giving you everything that I went through to develop myself as the inner circle trader, the person that you see that calls the market and gives the analysis concepts, all those things that led up to my understanding and to become who I am as a trader. Those were the things that I went through. And it was kind of like a social experiment to see if anyone else could be, I guess, created the same way I was. And for the most part, it didn't happen. So it was a failed experiment in my eyes, but it was still fun to watch, the growth of some individuals that did pretty well with it. But nobody came to the level I was hoping they would, by way of me presenting the information. So with that, I'm going to ask you a question, and this is rhetorical. Obviously, you guys aren't going to be able to tell me what your responses are. You can share them on Twitter, but it's really just rhetorical. What pair have you spent the most time looking at? Now, there's no correct pair. Okay, please don't think that there's one pair that's better than the other, because they all do the same thing. They all open, they all post a high, they all post a low, and they close, and they create a new bar or a new candle. So we're trading price. We don't care so much about the particular currency. Now, there are times when certain currencies should be focused on others, and that's completely outside the scope of this discussion. But I want you to at least right now suspend your curiosity in chasing everything else and just pick one pair. And it doesn't matter which pair it is, but today, as a goal, I want you, and it don't have to be decided at this moment right now, but give it a day. Think about what currency pair you have gone to on your smartphone, on your demo account, or maybe you've made the mistake of opening a live account right away without knowing anything, and what pair are you trying to lose money on? Okay, because that's what you're doing. If you don't know what you're doing, you're really just basically trying to lose your money. And there's really no benefit in doing that. Okay, um, so we're going to assume that you have picked one of the majors. Okay, so if you're going to be profitable, and that was going to be your goal when you started as a trader, hopefully that's been the case for everyone, and you live in the United States, my advice is to try to trade something that's paired with the dollar index. And I'll just simply say this. When you are profitable, you get better tax treatment when you trade a dollar-based major. Okay, and I'll just leave it at that. So doesn't mean you can't make money on the crosses. It just means that the bulk of your volume would be better suited in a major cross with a dollar. Okay, and I'm not here teaching tax code. You talk to your own tax preparer. They have to have some knowledge and understanding about forex, and they'll concur with what I just said. Okay, so we're going to assume you pick a major. It could be euro dollar, pound dollar, dollar Swissy, dollar yen, dollar CAD, Aussie dollar. Pick any one of those, okay? And I'm not trying to promote one over the other, but I will just simply say that I am predominantly a GBP USD or cable trader, British pound. Uh, I can tell you the reason why I feel that way is because I started as a commodity trader. And the British pound, the Deutsche Mark, which there isn't a Deutsche Mark anymore, those two pairs, or I'm sorry, currencies, I traded those predominantly the most as a currency trader. And I had really good luck one time in the Japanese yen, and then at a later time in my career, it really stomped the crap out of me, and I just don't like yen. Okay, it doesn't mean that the things don't work in yen. It's just I just don't want to trade yen because it's in my head. It's all psychological, and I just don't want to submit to having that engagement anymore. So I personally don't like yen, but some of my students do exceptionally well trading yen pairs. So don't let me, as a mentor or just some guy on the internet talking about what he thinks is right, don't let me discourage you from doing any one particular pair or the other. I'm just giving you my personal opinion because I get a lot of this in the email. So I'm trying to compress all that into this short little presentation. So we're going to elect to go with um, the euro dollar. And I'm going to use the euro dollar because it's the most widely followed in all of the Forex market. And it's pretty liquid. It's very closely tied to the dollar index, which once you go through my tutorials, you'll see that that's actually advantageous for you because you want to be looking for the imbalances and tug of wars between the impulse price swings in the dollar. They're going to be mirror images of what you see in the euro dollar. And by that, I mean, if the dollar's bullish, you're going to see extremely perfectly timed bearishness on the euro dollar. Doesn't mean it happens all the time. Okay, as you've seen last week, we had episodes where the euro dollar was held in a range. British pound was allowed to trade higher and lower in trend, and that gives us an indication that there's a trade occurring in euro pound. And again, that stuff's in the tutorials, but you got to dig it out and study it. But I'm going to give you the bare bones core essentials to scalping, and what I've already given you is a complete system. It's absolutely perfect for a new trader because it gives you the context to go in to the charts, study, look for certain things, and you're not wasting your time. You'll be able to see things that repeat. They have to have a reoccurrence factor. Okay, if what you're studying doesn't have the ability to be replicated at least a few times a week, you're probably not studying anything that has any validity or substance. You're probably looking at indicators and stuff. And the only indicator you're going to see on my chart is a Fibonacci. And the only thing I'm highlighting there is a target or a specific range in where I think a entry should occur. Do not fall prey to the idea that everything I'm doing hinges solely on the basis of Fibonacci, because it's not. Believe me, I don't even need that Fibonacci. But the Fibonacci as a teacher helps me draw your attention to a level I've already arrived at. And you're not going to believe me, but I knew this high at 116.55 was probable last Friday. Last Friday at midnight. Last Friday. Now, you're not going to believe me, okay? But I'm not trying to convince you of that here today. But there's certain concepts that repeat themselves with a great deal of precision, and they're like clockwork. So if we have to suspend our disbelief about the markets being 100% manipulated to the degree that the daily high and the daily low is already predetermined before the day even begins. So in your notepad, and if you don't have a notepad, next time we watch a live session, because anything can happen. YouTube could go on the fritz. Maybe my compiler doesn't record the video, and you'll lose the insights that I give it. And I sometimes won't remember what I said because I'm really not trying to work off a script. I know what I want to deliver, and it's such a small little segment of insight. But I want to give you some foundation, and also, if I can, always try to throw little answers to email questions that kind of segue with what I'm teaching. But in your notepad, I want you to write down price is 100% manipulated, and the daily high and daily low are already predetermined at midnight New York time. So that means midnight last night, for me it's 7 hours and 21 minutes ago, the daily high and low has already been predetermined for euro dollar. It already has been determined. Now, you don't know what that is. I don't always know what it is, but there's certain times of the week where certain things align where I have the strongest, well, I guess, probability that I know where the daily high or low is going to be. I've given you several examples of it on Twitter, in video. Yeah, I've already shown you that. I've shown you trade examples. Now, it's not imperative that you know that this is the high and therefore you hold to get out exactly at 116.55, because to do that is going to be detrimental to your bottom line because you're going to sometimes get it wrong. But you don't need to have that actual high. For instance, I'll give you an example. And this is to set your expectations. I'm not trying to talk to hear myself. Okay, I'm not trying to waste your time, but what I'm saying here means a lot. So take note on this. If we know by way of our tools or what I'm teaching you, if excuse me, if we know that there's a strong probability that particular pair that we're following, in this case we're using the euro dollar as an example, if it can go to 116.55 as a daily high, and you've gotten an opportunity to get long say down here in the New York session, or if you have a London close continuation, which is what this is here, optimal trade entry. If either one of those are used to get in, and your convictions are that we're probably going to see the interbank algorithm print a daily high of 116.55, if that's the case, don't demand such precision that you hold for that exit price. Now, I showboat online to prove to other people that what I talk about is really there. I gave you the chart. I wait and wait until it hits the levels I want, and I screen capture it right when it happens. So that way you guys can see it. If you go on Twitter, you'll see that it's actually the very high on this candle. This particular one's right here. It ain't going to pop up on this recording, but the actual high comes in at 116.55. As the candle was creating that high, it never went any higher than that, and it traded lower as a result. I do that to prove to the doubters, also to reinforce the people that are trying to learn from me, that it is absolutely predictable. Now, predictability is not the same as profitability, because you can still screw up. You can still demand absolution, okay? and you're not going to find that, okay? There's no Forex Jesus, okay? You can pray all you want about the market doing what you want it to do, and it ain't going to do it. Okay, so you have to have rule-based ideas. So the way I interpret intraday price action is I want to get a rough idea where I think the daily high or daily low is going to be, compare that with a bias, okay, and you have to have a bias. Traders will say, or instructors, I say that with quotations in my hands, they'll say, don't trade with a bias. That's foolish. Those people don't know what they're talking about, okay? They have no idea what they're talking about, and they have no business trying to tell anyone what to do, because if they're doing anything at all, they're misleading you. I'm telling you the truth. These markets are manipulated. They're absolutely not for your benefit. They are out there to whale, okay? And that means they're going after big, large institutional funds. That's what this is. Now, yes, there's global commerce that they actually are used to facilitate global commerce and transactions between countries and nations and doing business and such. Yeah, that's wonderful. But there's also opportunity there. And the opportunity is to go after large liquidity bases. And that's not going to be retail. Retail is not even on the radar. So if we understand that that is how these markets are operating on a day-by-day basis, and it's the largest market in the world, and it's ran by the banks, which, banks don't open up to go out of business. They tend to stay in the business or be consumed by a larger bank. If we have that understanding, we know that there's a large degree of probability that the daily high or daily low is going to be predetermined at midnight every single day. And once we know what that level is, and we compare it with a bias, in other words, if we're bullish on the euro dollar, as indicated yesterday, okay, with optimal trade entry here, and one that happened in here, my advice to you is, if you know these things here, okay, and I'm going to give you things in my tutorials that help you get to this. Now, it's not going to be this precise. This is something that is taught in my mentorship. But in the tutorials, I've given many instances on how you can get real close to this number. So I'll give you an example. I teach the 50 levels, and the 00 big figure levels are significant. I want you, and this is something you write down in your notepad too right now, because this is homework for you this all week. I want you to put every 50 level and every full figure 00 level. And what does that mean? Go over to your horizontal line. Okay, and we're going to drop it onto a 50. Look at that, I couldn't have done that any better. So it's on 116.50, and then we're going to go down to 116.00. My eyes are still not awake yet, so I apologize for being a little slow on the delivery here. Okay, so we have 116 big figure and 116.50 mid figure. Okay, you'll hear these terms used a lot in my tutorials. I want you to put your 50s and 00 levels on the currency pair that you're going to follow. Okay, and I want you to use whatever the price is right now. Right now it's trading at 16.30. So the next two levels, above and below, it's the 50 level and the 00 level. Okay, inside of that, price is going to do all kinds of gyrations. Ignore it. Don't do anything with it. Okay. I want you to wait until price trades to one of these levels, the 50 level or the 00 level, okay? And then wait for a reaction. It could come down to 1600 and bounce, come up, and then create a retracement, and that could be an optimal trade entry for a day trade. And test it. I'm not telling you to put live money on any of this. I'm telling you to practice the reactions off the 50 level and the 00 level, the mid figures and the big figures. If we watch these levels over time, you're going to see every setup that you'd ever need is on these levels. And it's because of the interbank volume, and the banks themselves like to work off these levels. They'll defend big figures and mid figures at these levels, and there's going to be a lot of orders, which is what makes these markets move around. It's not indicators. None of this stuff, and you'll be surprised that most most folks believe that the chart itself pushes price, and charts are only reflecting the sentiment and actions of actual transactions. Banks don't trade with charts. Okay, it's like a misnomer. You know, I'm smart money because I'm using a 4-hour chart. No, it's my way for me to communicate to you the order base that will be around that particular price level, and it's easily seen and observed on a higher time frame intraday chart like a 4-hour. So don't think that there's any particular magic that a down closed candle supports price. That's not it either. Order blocks are not it. It's just one small component to a larger whole that you'll need to consume in my content. But for intraday basis, I want you to focus on 00 levels and 50 levels. Okay, and just for homework, go back through your currency pair. And it's real simple. I mean, all I got to do is just drag it to the left. And you'll see there's a lot of instances where price creates opportunities at these levels. Now, you might have to wait. That's beautiful because it's going to teach you patience. If you have the 50 and the 00 level and you wait for opportunities where price trades to these particular levels, well, here's one right here. Now, what I mean when it gets to these levels, I'm not saying it hits the level exactly and bounces. It just means around that level, and I'll give you the perfect example here. Price runs here, creates a small little, let me see if it breaks that high because I'm not sure if I can show it to you there. Oh, I think I just lost it. Here it is. All right, so we have price creating a high at 116.07, and the last high comes in at exactly 116.07, so it really didn't create one there. It would have been better had it been broke the short-term high, but that is an optimal trade entry retracement. It would be a 79% retracement level there by eye only. But you can see the overall pattern. This is what you would expect to see around the big figure 0 level or the 50 level, okay? And eventually, over time, you're going to graduate to adding the 80 level and the 20 level, and that's it. You need nothing else. You don't need to worry about drawing support resistance lines on your charts. You don't need to worry about putting, you know, any kind of, well, whatever kind of lipstick you usually put on your charts. The books taught me use an old high, draw a line across it, and price is either going to hit it and repel from resistance, or it'll break through and come down and find support. And I can tell you, I've lost hundreds of thousands of dollars doing that. It doesn't work because it doesn't give you any context about why that level should be traded on the basis of order flow. Now, not order flow in the form of market profile, footprint, depth of market. I'm not talking about that. That's entirely outside the scope of what I do. What I internalize is why the market should have orders around specific levels. So regardless of what style of trader you're going to be, I'm teaching predominantly scalping now because it gives you the ability to go in and do a lot of research, a lot of examples, and the things that you learn in price action on scalping will be beneficial for you in all of the types of trading you can do. So in summary, okay, and then we can get to the nuts and bolts out and close this video. We have the 00 level, big figure, the 50 level, and in between that, we have 50 and 00. What was the level I told you to watch? The 20 level. Okay, so we want to have our level at 1620, and the other one would be 1680. And that's here, okay? And then the next one would be 1700, okay? So that way, guess what? We've already done all of our work for support and resistance. What? It's that easy? Yes, it's just that easy. Because my interpretation of price action is I know what banks are going to do. I know what large institutions are going to do because you can see it yourself. Go on the charts and pull these same levels up and go back over price action. You'll see it there. Okay. I gave you an example of earlier, excuse me, the uh, the example earlier where it didn't really give me the optimal trade entry. Let's do this. All right. So if we have that range here, and I know it doesn't qualify for the setup, but I want you to see this is the reaction you get off of it. But look how it forms around the big figure. And then later on, this same price action here, I told you about the optimal trade entry example here yesterday. Look where it occurs on the big figure, 16. Now that's not coincidence. That's just the way it works. And what about up here? Isn't that an optimal trade entry? I gave you the daily high yesterday. Look at the opportunity that's here. Highest body, open or close, down to the lowest body, open or close. Perfect to the 79, 79% retracement level, sells off. And then here's another one, smaller one, sells off. And there you go, symmetrical price swing. So I gave you real institutional support resistance. I told you how to find the optimal trade entries on a scalp. They set up easy. You're not scratching your head looking at a chart saying, good grief, what support resistance do I use? What supply and demand zone do I use? What, you know, I'm being facetious now, but I want you to know that the folks that try to teach you these things, okay, in terms of technical analysis, they have, for the most part, have zero understanding of what goes on in an institutional basis. Okay, support resistance are based on orders. They're not based on anything other than that. So without having an understanding of why price is going to move and gyrate around specific levels, you're going to be losing money. You're going to hemorrhage money, and then you're going to go into the cycle where looking for things and having no understanding or definition of what it is you're looking for, it's going to frustrate you. And the human characteristic in us is going to be, well, what I just did didn't work, so I need to do it harder immediately because I need to have the reaction I want. And in trading, that is the death sentence for you. You need to stop and just be patient. What are you waiting for? You're waiting for one of these levels to trade. And this is when I say these are institutional price levels. Okay. I get jeered and prodded by folks that I'm convinced that they use my stuff and don't want to admit to it, but they hate the fact that I can draw up attention real quick and I can teach right away something that's applicable. And some of them either are aspiring to start their own company or start their own signal service or own business. And the best way to do their business is to try to tear me down because I was the guy on the internet for years doing for free. Now, I still am doing this for free. You didn't pay anything to learn this. But right now, what I've already given you in the YouTube videos, I've already given you in my forum, I've given you in old tutorials, and now with just this, you have no reason to subscribe to any subscriber-based programs, not even to mine. Okay, now think about this. Think about what I just did. Okay, if I'm in this to make money and panhandle off of anyone, why in the hell would I just give you something that you would never ever ever need to pay me or anyone else for? Again, what kind of business model is that? It's the same business model I used when I first started. I gave all this stuff out for free because I'm already rich. I don't need anybody's money. Okay, I enjoy doing this, but there's certain things I'm not going to teach publicly. I'm just not going to do it. Do you need anything beyond this? No, because what has it done? It tells you where the setups occur. Wait a minute. It's just that easy. It's absolutely just that easy. You have these levels on your chart, and I don't care about what pair it is you're trading. This works on the British pound. It works on the Canadian dollar. It works on Bitcoin. Try it on that. I don't trade it, okay? But for feedback, I know a lot of my people trade Bitcoin. Do it on Bitcoin and just see if it doesn't work on Bitcoin. I'm interested to know because I don't really track that asset class. But everything out there, it works on commodities. It works on the Bund. It works on uh, stocks. It works on everything because it's the same MO. The people that run these markets, they use the same business model. It's all the same thing: accumulation, distribution, and manipulation. Those three things, those three components, you need to know what it is that the cycle is in right now. And it sounds complicated, it sounds mysterious. And I made my presentations like that to draw everyone's attention. I'm trying not to do that now, and I'm going right to the core of what it is that you should be focusing on, because it created a lot of work for me in terms of emails. And I got frustrated over the years and said, you know what, these are the same repeating questions. If I ever do this again, and I just recently started coming back and providing content, I want it to be concise. I want it to be user friendly right away, and it leaves very little in terms of guessing about what I was alluding to. So, in summary, I want you to pick one pair. I just used the euro dollar here today, okay? And if we use one pair, we want to have our levels arrived at. So our support resistance levels are going to be what? 0 level, the 80 level, the 20 level, and the mid figure 50. Okay? They are your support resistance levels. Do not concern yourself with anything else for right now. I promise you, if you watch over the course of a week, you'll see one good setup. And that's all I want you focusing on right now. Do not try to do everyday trading. I've been doing this for a long, long time. In March, I'll be 25 years doing it. So my ability to do it is completely going to be well above what you're able to do first starting. So don't compare that or contrast that. Just because an instructor can do it and he taught you or she taught you doesn't mean that you're going to be able to walk out and do the same thing the first day or the first year. It ain't going to happen. So you have to grow into that. So we have support resistance levels determined, and I also gave you previous highs and previous lows. So there's your targets, okay? So you know a level is going to set up around one of these levels here. And what's the setup? The optimal trade entry. You're waiting for a scenario where this retracement idea occurs. Sometimes it'll be right on the level and hit it. Sometimes it won't. Sometimes it'll go through it again. You're generally looking for this pattern, optimal trade entry, around a 0 level, a 50 level, a 20, or an 80. And I promise you, I guarantee you, if you go through your charts, you're going to see a plethora of these examples. Now, I don't want you, again, trying to do this every single day, because I've taught that you can double your money every single year with just less than 25 pips, 23 pips a week at 2% risk. If you know what you're doing, it doubles your money every single year. If you start with $1,000 in 10 years, that's $1 million. Now, it doesn't equate to taxation and such, but it doesn't take very much to do very well. And that's my point. Every one of you that are starting right now, that's where you should be living. That's your neighborhood right now. You're not trying to get to the Beverly Hills, okay? You got to start somewhere. I started somewhere small, and believe me, it did not take long to get very good at this and to be able to find setups consistently. Very, very consistently. So we have one pair. We're going to put our institutional levels here. That's our support resistance ideas. Our pattern is optimal trade entry. What's our daily bias? I already taught you that. What's going on the daily chart? Did it create a swing high or swing low? If it's a swing low, we're going to continuously look for the previous day's high to be taken out. If it's a swing high, we're looking for the previous day's low to be taken out. There's our bias. And you're going to wait for these setups to occur at these institutional price levels. Now, what I just gave you will never, ever, 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 ever stop working. Because if I ever felt that, you never would have met me. I never would have taught it to you. This is how the casino runs. The casino is the markets. They're not going to change how they're doing it because Michael Huddleston from Baltimore, Maryland made some videos on YouTube. And I don't care how many people subscribe to it. It's never going to stop working because there's always new suckers. The market will always draw in a new pound of flesh. And I don't care about trying to be right every single trading day. That's not my concern. Yesterday, I had fiber dialed in and I did not trade it. Do I regret it? No. Am I going to not be able to eat because of it? No. Am I going to lose sleep over it? No. I am indifferent to whether I take a trade or not take a trade because I don't care anymore. I'm satisfied that I know if I sit down, I'll find a setup. That's what you need to graduate into. But you will not get that if you go in seeking a setup every single trading day, because you're teaching yourself to get stimulated and rewarded. The problem is that reward won't come in a positive return. The reward sometimes is going to be experience, always, but that experience may be against what you thought it would be. In other words, a loss. And that's learning. That's where you grow. You're going to try to avoid that. And I'm telling you, invite that to occur. You want that to happen. That's why you're in a demo. You want to learn how to absorb that tendency to be wrong and see how quickly it is to recuperate and come back from that loss, because the next series of setups that will come. I'm not afraid of my setups failing. I'm not afraid of my setups never coming again, or the frequency to die off. They're always going to be. These setups will always be there. In the summertime, they're always there. In the shittiest times of the marketplace, these are always there, because there's orders always stacked around these levels, just above, at, or just below in these big levels of 50, 20, and the large double zero levels. Orders are push price around. Orders by large institutions, insurance companies, larger banks, okay, large corporations, like for instance, say, Apple, they want to do business in China. They gotta make a transition from the dollar to the Chinese currency. Well, that's forex. That's what goes on. That has to be an exchange that creates um, gyrations around specific price levels. So if Apple puts in a request to convert $2 billion worth of dollars into Chinese currency, or it could be the British pound. They want to do business in the UK. They want to do something. That is going to be a large inflow of orders that a bank can use, and they'll take that request to convert dollars into British pound or Chinese currency or whatever it is that they're trying to do. I'm just giving an example on a global commerce basis. They'll use that and they'll frame it around one of these levels, unless the customer demands a specific uh, range of what they're willing to convert at. And sometimes that occurs, and then sometimes it's not. They want it done expediently. Well, then it goes in the favor of the bank that does the conversion. But I'm not here to teach you all that stuff. It's not necessary, but I'm just telling you there's a rhyme and reason why this stuff works. It's not simply because it worked perfectly in hindsight and I showed you examples of it. I want you to take what I just gave you today and prove to yourself. I'm already convinced of it. Okay, you're not going to convince me of it. I already know. But you, as the student, you need to know that there's no reason for you to rush. Having these levels on your chart, using the daily bias concept I've already taught you, and also what the optimal trade entry pattern is. The Fibonacci, I keep getting asked that question, what's these levels? How do I get that on my fib? Go into the optimal trade entry primer video that's on the YouTube channel, and it'll teach you that whole business, how to set the fib up exactly how I have it here. Now, in future teachings, I'm going to help you get to the point of knowing where your target is, where your entry is, and how to use that in terms of your money management. And I think that will really surmise the whole thing in terms of a complete trading pattern system, and you won't need anything else. Now, I'm encouraging you to study the tutorials that I've made over the years, but you don't need to be at a feverish pace going through them. I know you're all thinking that they're all going to disappear again, but what I'm doing is I'm actually going into them and removing certain songs. I'm removing certain comments I made about a particular um, forum that I believe is toxic, and it's not Baby Pips. Um, and I just want to keep the presentation as clean as I possibly can, and I am monetizing them. I'm putting them on my YouTube channel. So I'm also including certain things and encouraging folks that if they see my videos being uploaded by anyone else, I usually get flagged, and then someone else will tell me, or the things I add in my videos, I pay a service to show me where my videos are being posted or re-uploaded. I get a lot of flags about Google Drives. I get that like on a weekly basis. A lot of people have that in their Google Drive. Sometimes, I'll reach out and try to touch them and say, hey, look, can you not do that? And most of them are all set to like private, where people aren't publicly sharing it. But if I've created the video and I did all the work, okay, I should get the perks of it. And the folks that tried to put my videos up in the past on YouTube, they're trying to monetize it, and they learned that by having songs in it, wasn't able to monetize it. So now I'm removing songs that allows me to monetize my own work, but I don't want other people doing that. And I'll come after those individuals and have them take it down off of YouTube. So, and plus, like I said, I pay for a service to do that. and for me to cover the cost on that, the monetization. I can tell you right now, I'm not making a lot of money on YouTube off of these videos, but it does help pay for costs of doing things like this, doing live sessions, and the resources that I'm going to make available to you. All that stuff costs me money. You know, I put about $15,000 into all those previous teachings that you guys just watch for free, and you don't really consider that when you're looking at it. But for years, I paid a lot of money, and I like teaching, but at some point, if I'm going to continue until I don't want to do this anymore, there's got to be some kind of a cost um, deferment on the basis that if you're consuming it and you find value in it, great. You know, support the videos by watching YouTube, and you know, if you have ad blocker on it, I'm not going to get any revenue off of that. But if you have ad blocker, I'm not going to get that. But in my forum, I'm just letting you know it's a free forum, but there will be ads in that. It's going to be Google AdSense, so I'm not going to add subscriber-based membership to it. It'll all be ad supported. And my assumptions are, with about 500,000 views in my regular mentorship group per month, and it only got 664 members that have made it all the way through, I get about 500,000 views of traffic in my mentorship forum. So I know I could probably get about 2.5 million views as my projection on my free membership forum, and that'll support a lot of things. So I don't really have to charge you anything. And it'll support also the cost of me running my mentorship forum as well, because that costs money as well. So I'm being completely transparent as best I can. That way I hopefully can avoid a lot of the stupid stuff that comes by way of Twitter and email. But you've been given a really good foundation today in terms of what levels you're looking for, why you're looking for them, where the setups, how the setup looks sometimes around that level. And I've given you just a small sampling here. Your homework is to go through your particular pair, and I encourage you to not use the euro dollar, because I did it and I don't want you mimicking me. Think independently. You might want to do something else like the Aussie dollar or Kiwi dollar. Pick one of them. It could be the beast. Okay, pound yen. It still works there too. But wait for one of these levels to be traded to, and then wait for that daily bias to come in, and then target daily highs and daily lows for runs on liquidity, and you have a complete system. The only thing you're missing right now and lacking is, what do you do with your account? How much do you risk? Where's your stop loss? And the question I'm getting now is, how much do I take off at these targets? And that's going to be completely up to you. I don't ever give that in my mentorship, and believe me, if they were all invited to answer this on Twitter, they would all tell you. I tell them the same thing, and they paid for this insight. At these levels in here, it's completely up to you, because it's your trade. Mine is never the same way always. I don't always say, well, I'm going to take 30% off here and then 50% here. I just go by what I see in the chart. And if I feel that the continuation is most likely going to occur, then I will leave a larger portion on. If I am in doubt about the continuation to the next target 2 or symmetrical price swing, then I'll take a larger degree at first profit and then leave a smaller portion on, and then I'll split that in half at the next logical level. As you see in my examples, I very rarely have a large position on at the end of the trade, and I'm never really holding to the last point. And that's my final point in this. If you know that this is likely the high, okay, and I'll give you tools that help you do that in the tutorials. If this is your objective on a daily high, my personal conviction over the last 2 decades in trading is what I gleaned from my mentor, Larry Williams. Now, he didn't sit down with me on a day-by-day basis. I never met him. I never shook his hand. But I researched everything about everything the man ever did. Okay, and just like my students say they hear my voice in their head, I still hear Larry's voice in mine. And sometimes I'm telling him to shut up, because some of the things he taught, I don't subscribe to. I've evolved beyond. And I want you to have that same benefit. Don't take everything I say as gospel. Let it be a challenge to you and dig deeper. But if I do say stay away from indicators, trust when I tell you that's the best thing you can do. I learned from Larry Williams, if he knows there's a target he's looking for, okay, his is basically a profitable close. In other words, if he's in a long, the daily close, he's trying to hold on for that. If he gets out before that, but not at the close, he's doing, the best service he can provide for himself, because it may not get to that level I may not see 116.55. It might go to 116.54, and my limit was at 16.55. I've had that happen to me. So what I do is I go 10, 15, sometimes 20 pips early, and I get out there. Why? Because I want to make sure I'm getting out at a logical level, price is moving in my favor, and I don't care about looking smart. I want to make sure that my homes are paid for, my insurance on my vehicles, all the things that I do on a day by day basis is going to be supported, and I'm never going to have to go down in my net worth. It's always going to be increasing. Doesn't mean I'm not taking losses. It just means that in my business model, I want me focusing on profitability, not perfect, not precision, entry, exits always. The point is, if you know this is the entry down here, or this is down here, I'm sorry, over here, and this is where the logical target is, getting out before that, there's nothing wrong with that. The folks that will say, well, that's stupid, if that's your target, you should hold on to it, they're not profitable. They're holding on to absolutes, and absolutes don't pay. Now, analysis and execution are two different things. I use my analysis to give me the rough idea of where I should be getting out at the best case scenario, and what I make as an exit is earlier than that. And I'll let the guys that want to be hot shots try to hold on for those last bits. I get the accolades and the high fives by knowing in advance and showing you the levels beforehand. And the traders that are new, they see this and they go crazy. Oh, he's getting out to high. No, I'm not. I'm absolutely not doing that. And I don't have my full position on there either. I have paid myself throughout the way. Now, I didn't take this trade. I'm saying from a conceptual standpoint, I pay myself for the time I've invested and the risk. Now, there's going to be people that say, well, see, that's stupid because risk reward says that you had the most maximum risk on at the beginning of the trade and you're taking off. I'm taking money out of the marketplace. Hello, that's what you're doing this for. I'm managing risk because I'm reducing the risk as I stay longer in the trade. Okay. And I'm satisfying that urge to be a male conqueror, the caveman mentality that's in men that's we're hardwired to feel that. I still am satisfied with that because I have something small on, or I've already noted that high in advance. So that satisfies me in ego. And you're always going to, as a male, you're going to have ego. I don't care who you are, you're going to, especially if you get good at this. It just happens. I was not an egotistical maniac when I first started this. I was very, very quiet, docile, very rarely said anything blue collar, and I was Mr. Nice Guy. And when you start making $17,000 a week, that stuff changes real quick, and you think your shit doesn't stink and you're better than everybody else. And it's an ugly trait, but it's something that people you go through. And unless somebody smacks you down, and for me, it was God, he put the God smack on me and humbled me. And it doesn't probably sound like I've been humbled, but believe me, I do a lot of characterization and just I try to be entertaining when I'm online. Sometimes it doesn't deliver well. Sometimes it does. But I do those things to try to satisfy those little percolations in my ego. I have to wrestle with that every single day because what I do is so good. It's hard not to be egotistical. It's hard not to be arrogant. It takes a great deal of effort not to do those types of things. So for you young guys, in closing, as you learn this stuff, do not take this as an invitation to go on social media, Facebook, Instagram, and become the next Forex baller. Okay? Believe me, it doesn't deliver like you think it will. You're not going to deliver a message that people are going to fall in love with. They're going to say, well, this guy's a jerk, or he's fake because he's arrogant. You're over the top, so therefore you can't be profitable. And then you're going to spend so much time trying to convince and prove that you're just going to waste your time, and it's not going to give you what you expected in terms of response. So don't even waste your time with it. Who cares if they don't believe you're making money? Because I don't care who's making. Whoever doesn't believe that this stuff works, or I'm not profitable, or I don't really trade, or I'm delivering pizzas for Domino's in a 1992 Ford Mustang with a rusted out trunk. I don't know where that came from, but long and short is I don't care what people believe about me. I only care about the folks that put the time into learning what I'm teaching. And believe me, if you do these things, you will see that your time has not been wasted. And it's consistency, it's framework, exactly what you're looking for. But I give it in small pieces because it's required to learn it that way. If I give you all one presentation, this is what you do, you're not going to do what you're supposed to be doing because I want you to focus on small segments of price action and components of it, and you'll be quickly convinced that each individual component has validity, it has substance behind it. And when you put everything together, you get blue ribbon results. So hopefully you found this insightful. Until next time, I wish you good luck and good trading.